Okay, this is an example of personal income tax. So we have a scenario here. John and Vicki have combined wages and salaries of $64,280. They have other income of $5,283, dividend income of $324, and interest income of $668. They have adjustments to their income of $2,484, and then their itemized deductions are $7,615 in mortgage interest, $2,250 in state income tax, $3,300 in real estate taxes, and $1,219 in charitable contributions. They file a joint return, they're married, and they have 3 exemptions. So the first thing we'll do is we'll add up their income. So they've got $64,280. Then they have $5,283 in other income, $324 in dividends, $668 in interest. So if we add those up, we get $70,000. Let me just put a little border on here so we know that's our total. Okay, so $70,555. But then there's adjustments to income. So maybe they have some things that they are able to subtract, like student loan interest or educator fees or things like that. So then we come down to $68,071 as their adjusted gross income. Then we're going to look at their itemized. And then we'll add those up. So we've got $7,615 in mortgage interest, $2,250 in state income tax, $3,300 in real estate taxes, and then $1,219 in charitable contributions. And then we'll add those up. Again, I'll put a little line so we know. So they have $14,384. Now then you always want to compare to the standard deduction. So then let's go do that. So if I go back to the book, again, this changes every year. So again, this is going back, I feel like to 2016, I think what the book goes back to, but every year this goes up. So back in 2016, it was $12,600. So we come over here, $12,600. Again, this is higher. So we always want to pick the higher one. So then that's the one we'll go with. So that's higher, so that's better. Okay, then we'll come over here and we'll look at their exemptions. So they have 3 exemptions, so they must have a child. Now then again, if we go back to the book, this is something that changes every year too. So we've got $4,050 per exemption. So then we'll take the 3 times the 4,050 and we get $12,150. So then if we come down and kind of put those all together, we've got $68,071 of adjusted gross income. And then we're going to subtract the $14,384. Which is our itemized deductions. So then 68,071 minus, well, I think I'll just keep going because I'm also going to subtract these exemptions. So then the 12,150, oops, let me say less. The exemptions. So then now that should give us our taxable income. So let's see what we get there. So now if we take the adjusted gross income less those itemized deductions, less the exemptions, we get taxable income of $41,537. Okay, then we calculate the tax. So then we've got, again, it's on the 41,537. So we have to go back to our book again. Now, if you're doing this in the actual homework, it will have little, you can click them and it'll, like windows, it'll be like little pop-up windows. So let me see here. Okay, so then we are married filing jointly. So we go to the married filing jointly table, and we are in this second category here, though. So we're above 18,551, but below 75,300. So it's going to be 1855 plus 15% of the amount over 18,550. So 1855 plus the amount over, I'll just do the 537 minus 18,550. Okay, let's double check. I did put that in there right. So 18,550. Yes, that's right. So again, looking at my formula up here, 41,537 minus the 18,550, and then I'm going to multiply that times 15%, right? 15% over the amount. So then that times that gives us that, and then we'll add those together. So the 1855 plus the 3,448.05 gives us $5,303.05. So that kind of covers everything. So again, you'll have different things in your homework leading up to that. You may have smaller ones that you don't have to do, maybe the itemized deductions, or you don't have to look up the tax. But this one kind of does everything. You've got your itemized deductions that you'll compare to the standard deduction, calculate your number of exemptions at the $4,050 each, then subtract those to get to your taxable income, and then go to those tax tables. And again, all of those things are in the book, but when you're doing them in the homework, they're going to pop up. There'll be little pop-up. You click them and it'll pop up and give you this information. But they're also found here in your ebook as well.